Today is November 14th, 2024, and it's time for some new stock picks. As usual, I'm going to review the performance of my picks from this time last year, and offer a bit of an economic analysis, assess market conditions, and then proceed with three new stock picks for the next 12 months and beyond. This time last year, I picked a utility stock, Endesa, symbol LSE. The stock was up 7.0%, including dividends in US dollars. Then I picked a consumer staple, British American Tobacco, symbol BTI. This one was up 26.9%, including dividends. Lastly, I picked Mercedes-Benz Group, symbol MBGYY. Mercedes-Benz was down 1.8%. The average of these three stocks was 10.7%, which compares with 31.7% for the MSCI World Index, including dividends in US dollars, as represented by the EURth ETF. Looking back, the world economy over the last 12 months or so has not performed that well, with real GDP growth for advanced economies, as projected by the IMF, coming in at about 1.8%. It definitely avoided recession, however. The markets were pricing in some probability of a recession, so as the months went by without a recession, stock market valuations went higher. One strong investment theme has been artificial intelligence, with stocks like Nvidia performing exceptionally well. The markets generally pushed growth stocks higher rather than value stocks such as my picks from last year. With the new administration taking office, the markets are anticipating a stronger economy, deregulation, and a focus on American interests. There are also reports of efforts to increase government efficiency and reduce spending. While it's uncertain whether these ambitions will be fully realized, if successful, eliminating deficit spending and reducing the size of government could be beneficial for the economy and individuals in the long run. However, it's possible that the initial reaction may be challenging, as the economy and markets have grown accustomed to government stimulus. If the new administration achieves its goals, even partially, here are some potential outcomes. The US economy may outperform other countries, the US dollar could strengthen, and commodities might not perform as well. Depending on the extent of deficit reduction, the US stock market may experience a correction due to reduced liquidity, and other markets may also decline. However, this could present a buying opportunity for investors, as a smaller government sector can lead to a larger private sector. For my first pick, for the next 12 months and beyond, I have fund that tracks the Bloomberg US Dollar Index, Wisdom Tree Bloomberg US Dollar Bullish Fund, symbol USDU. Its holdings are US T-bills and treasuries long and short major world currencies such as the euro, the Japanese yen, the Canadian dollar, and the British pound. The US economy should outperform most of these economies in the next few years, and the US dollar may therefore strengthen against these currencies. Additionally, the proposed US tariffs may hurt some of these currencies. There is also an interest rate differential, with USD short-term interest rates being higher than all of those of these other currencies, causing this fund to yield higher than normal UST bills. As an added benefit, it usually exhibits a negative correlation to the stock market, meaning it usually goes up when the market goes down. Conversely, usually when this fund is down, the stock market is up, so if you own it, you should be happy that most of your other holdings are up and you are making money. My second pick will be Preferred Bank, symbol PFBC, relatively small California bank with a market cap of $1.3 billion. It was founded in Los Angeles in 1981 to serve primarily the Chinese American market. It became public in 2005 and hit troubles around 2010 with the regulators for not having sufficient capital. They have since turned around and hopefully learned their lessons through those hard times. They are ranked 11th in America's Best Banks 2024 by Forbes magazine. Since 2015, they have been able to generate a double-digit return on equity, with recent years being in the high teens and low 20s. With this kind of profitability, the stock should be trading at about 3 times book value, yet it trades at 1.7 times. So what we have here is quite possibly a good company at a good price. Plus, with the recent de-inversion of the yield curve, meaning long-term interest rates are now higher than short-term rates, they have a favorable economic environment to operate under. Banks typically borrow on the short end of the curve through deposits and lend on 5-year terms or more, making a higher spread when short-term rates are lower than medium and long-term rates. My third pick is Ottertail Corp, symbol OTTR. It's mostly in the production of electricity business, but it also in manufacturing, fabricating metal components, and producing pipes for water uses. The majority of its revenue comes from the states of Minnesota and North and South Dakota, with the biggest customers being commercial electricity as well as industrial users. This stock is an interesting mix of a utility and an industrial stock, and it could benefit from Trump's policies. Its profitability was decent at around 10% return on equity before 2021 and quite good since then at around 20%. Its valuation is reasonable at 2 times book value and 11 times forward earnings. Decent company, good price, I like it. As always, if you have questions about whether these stocks fit in your portfolio, or if you have any other investment related questions, give us a call.